We can't avoid the use of single-use plastics or even wrapping around food today. Even with the COVID-19 pandemic, I think it actually exacerbated the more usage of single-use plastics because of elevated awareness in hygiene, the need for cleanliness, the need for individual packaging. So in this particular video today, I'm going to explore the plastic packaging manufacturers, who are the players in the industry, who is doing a great job at running their business, and also is there an investing opportunity at some of these players who have seen their prices being beaten down, but at the same time having an advantage of lower raw material costs. Stay till the end of the video to see some of the winners within this industry. Hi, my name is John, and in this particular video, I'm going to cover specifically plastic converting business, people who produce stretch film or even blown up film manufacturers within Malaysia. I also show you how these guys are some of the largest plastic exporters around the world, and also what are the traits on how a good plastic manufacturer should be. So stay till the end of the video to see a comparison between few of these industry players and who I think may benefit in the medium to long run. Finally, as a disclaimer, whatever I share in this particular video is for educational purposes only. I'm not a licensed fund manager. It does not construe a buy or sell recommendation, and please seek licensed financial advice if you do need one. Also, on an important note, I do not own any of the shares mentioned in this video at the time of this recording. So before we actually dive into individual companies, I thought it would be good to give you guys an overview about the plastic industry. Now, most of us as consumers, we only see the end product, which is the plastic packaging itself. But then if we really start at the beginning of the stream, so to speak, it actually is petrochemicals. The raw ingredients to it actually comes from crude oil or actually natural gas. Now, in the form of crude oil, it's actually in the form of naphtha, and they go through a cracking process to actually produce chemicals like ethylene, polypropylene, and before they actually turn into resins, or what we call plastic resins today, the polyethylenes, the LDPE, HDPE, LLDPE. So I'm not going to go through all those jargon. You guys can go Google them. Actually, it just stands for high density polyethylene. So different kinds of polyethylenes are used for different use cases or applications. And the third generation, or what we call the plastic converters, they will actually buy these plastic resins to convert them into finished products like outer packaging or inner packaging. Now, everyone within this value chain earns a different margins. So like guys in the chemical space, like Petronas Chemicals, they earn quite a high margin spread because they are the ones that convert the raw crude oil or natural gas into the chemicals needed for the downstream businesses. And as you move further down the value chain, obviously the margins actually shrink because the value add. Now, it's not to belittle the guys who are doing converting business, but the guys at the upper end of the value chain actually earns much higher margins. And the guys, especially going down the value chain, earns lower and lower margins because it's much more labor intensive. There's not much R&D as compared to the guys who produce the chemicals, because there's a lot of R&D chemical formulation that it's actually their trade secret. Companies like BASF, Sabic, PTT, Thailand, these are the guys who produce these chemicals for the converters to convert them into the end plastic packaging itself. So who are the players within the plastic converting business? So The Edge came out with an article probably about 2 weeks ago that summarizes kind of like the industry, and I think it was pretty good. These plastic packaging companies, there are a few of them, BP Plastics, Scientex Packaging, Scientex Berhad, SLP Resources, Thong Guan, and Tommy Park. Tommy Park has suffered losses in most recent times, so we're going to focus those that were profitable, the 5 of them. So in terms of size, Scientex is definitely one of the biggest, but their revenue stream is also commingled with also their property development, even though they are still one of the largest plastic packaging producers within Malaysia. Thong Guan, based in Sungai Petani, is one of the biggest as well. SLP is a little bit more niche, a little bit smaller. And BP Plastics is quite interesting because their return on equity is actually among their peers is one of the best. I'll talk about them. I'll talk about this a little bit later. But as of today, these are the players within the industry. Actually, there was one more player, but they sold off their packaging business, which was SCGM. Yeah, they used to have a packaging business. That was their core business, and they sold it off. We're still waiting to see what official news has come out of the company on what will be the next core business. But because of that, that's why they're not on this list. Before diving into the individual companies and understanding plastic packages, I think we first need to understand the difference between two types of film being produced as a packaging material. One of it is called the cast film, the other is the blown film. What's the difference between the two? The cast is less expensive, more economical. It has higher levels of cling, highest levels of stickiness, I would say. In other words, it unwinds very quietly. Whereas if you compare that to the blown film, it's very, very tear resistant, high stretching capacity, and it's very ideal for irregular cartons. So I think that's where odd shapes and sizes will really benefit the users of blown film. Now that you know the difference between cast and also blown film, I'm going to dive a little bit deeper into BP Plastics and perhaps what intrigued my interest and why I'm a little bit more interested into this company as compared to the rest of the other players within this segment. BP Plastics has actually two main divisions, which is the cast stretch film division as well as the blown PE film division. And the blown PE film division mainly concentrates on different applications, including food and beverage. And between the two divisions, cast stretch film constitutes 75% of their sales, and blown film constitutes about 25% of their sales. These are the types of products that they have. And what's interesting is they're mainly an export-driven company. That means a lot of their products are not within use in Malaysia, but actually outside. In the past, when they did break down by country, Japan was one of their largest, followed by Korea. But today they lump it all together under this thing called Asian countries, which constitutes about 62% of their sales for financial year end 2021. So what actually piqued my interest specifically towards BP Plastics was actually this table shown by a public investment bank initiating report on them. And I always like to focus on the return on equity, or another number that I would like to focus on is also return on invested capital. And for return on equity for BP Plastics, if you look at the weighted average for the industry players, it's about 14.3%. However, BP Plastics stood tall, 19.9%. That's the first, I would say, trigger for me to dive a little bit deeper. I was also very, very lucky. 2 weeks ago, I had the privilege of co-training their management team with the second generation family members who are also in the business. And I walked away feeling pretty impressed. Mr. Lee, their main co-founders, with his family members, as well as the other two founders, Mr. Tan and Mr. Gui. I think I really appreciated the candor when they spoke about the business. I also had quite a bit of time to chat with Mr. Lee about the mechanics, the nuances of the industry, their relationship to suppliers. I also asked his opinion or his sharing. I mean, he was very generous in sharing with me how the industry actually works. What were the spot price mechanisms that are beyond his control, especially with his suppliers who are like huge guys, you know, Sabic, PTT, Petronas Chemicals. And the second main reason why it piqued my interest was actually the expansion that BP Plastics is actually undergoing right now. They actually deployed about 33 million to acquire a new machinery, their cast stretch film machine, which is their 9th machine. They successfully commissioned it in December 2021, and they allocated another 29.5, which is about 30 million, to build a new power substation. There's a little bit of hiccup due to COVID, but if it comes online, it's going to increase their production capacity by 18,000 metric tons a year, which will bring their total capacity to 138,000 metric tons a year, which is quite substantial, which is more than 12% gain. And that's where I like, hey, okay, return on equity is good. I haven't crunched the numbers on return on invested capital, but I assume it should be quite good as well. And then they are allocating capital for growth, So as someone who likes to look at businesses over the long run, I like to understand the capital allocation skills of the current management of any business. And if they are doing what I see they are doing for BP Plastics, I think I walk away quite impressed. I walk away quite comfortable to know that, hey, these guys are really trying to expand, growing the business, capping the OPEX at the same time. Because like it or not, plastic converting business is a very tight margin business. You're talking about high single digits, low double digit kind of margins. And if you compare them to their peers, which are much bigger, the Scientex of this world, the Thong Guans of this world, the margins are not as great as BP Plastics. The ROIC or ROE are not as great as BP Plastics. And again, I'm not advocating a buy or sell recommendation here. This is just factual what I see, the numbers, their track record, and I like what I'm seeing, especially on the expansion. So there you have it, my thoughts on BP Plastics. I walked away having met them with a great feeling that the second generation has the caliber of what it takes to actually take over the business, given more exposure, given more time. That's the first. Second thing is, as a very tight margin business, for someone the size of BP Plastics to have that kind of ROE return, as well as that kind of margins, really speak volume of the quality of the management. The bigger competitors like Thong Guan and Scientex, they command even lower margins than BP Plastics. So there you go, I mean, it's in the track record. Are there risks involved? Definitely. I think the biggest risk definitely is the fluctuation of plastic resin prices. But this is where quality of management comes into play, because if you know how to manage your working capital well, keep operational efficiency, operational costs at its optimum, automate, and also figure out a way to balance corporate governance, labor issues within that right balance, I think they will definitely entice more ESG funds to even invest in them. I know there's a lot of advocacy about removing the use of single-use plastics, but as of this point, there is no economic alternative to it, economically viable alternative to it. In my opinion, I think with the COVID-19 pandemic that has just passed us, it's actually heightened the awareness of cleanliness and hygiene, and I think plastics are definitely here to stay. So let me know if you found value in this video. I hope you've learned something. If you've learned something, please subscribe to my channel, give it a like, share it with your friends and family. Let me know what other content or what are other industries that you would like to hear, and looking forward to your comments and questions down in the comment section below. I'll see you in the next video, guys.